Okay, so this is the last video in the muddiest point videos on leases, and in this one we'll be looking at leasehold improvements, again from the perspective of both the lessor and the lessee and the effect on taxable income. So leasehold improvements, please don't let the word scare you. I found as I read through the muddiest points that a lot of students feel a bit overwhelmed by the leasehold improvements, but you really don't have to. Once you start getting the calculation, once you get control of that calculation and you understand how it works for both the lessee and the lessor, you'll see that this is a really easy way to get loads of marks, not just this year, but the further you go on in tax. Right, so let's start off with John. Let's get him out of the way and then we'll focus on Kaya, because Kaya's calculation has got a bit more to it. Now John, ladies and gentlemen, in terms of this lease agreement, has a plot of land, and on this land, in terms of our agreement, Kaya has to put up an industrial building, a factory building with 1.92 million. You must agree with me that John is definitely benefiting from the erection of this industrial building, because the piece of land is John's, which automatically means that the building that Kaya pays for and puts on this land is also John's. So from a gross income perspective, our Act tells us, in terms of our special inclusion paragraphs in gross income, that those leasehold improvements, and here we will look at the amount stipulated in the agreement. The lessor will always include the amount stipulated in the agreement. But those leasehold improvements, it improves John's property, so he will include it in gross income by virtue of paragraph H. And like I said, for the lessor, it is always and my column is a bit too small, but it's always the amount stipulated in the agreement. Now, and I'm jumping a bit because we haven't actually looked at this in class, but do you agree with me that this is a bit unfair to John? I mean, being taxed on 1.92 million rand in 2017, while he'll only get use of this building after 20 years, because for the 20 years that this lease agreement is in effect, Kaya's going to use the building. So John is in a bit of a bind, because he's going to be taxed on this massive amount and he's got no actual benefit at this point in time, even though it's his own property. So in terms of our special allowance for lessors, the receiver of revenue comes in and says, listen, I know that you are only going to see the benefit of this improvement at the end of the lease agreement. So what I'll do is I will give you special relief in the form of a lessor allowance. And this is in terms of section 11H of the Act. Now, please note again, you don't have to know that section number. You just have to know that for leasehold improvements, there's a special allowance for our lessor. Now, I want you to go and pull your question close by. If you have a look at the last paragraph before the required, it says, the amount of the section 11H allowance, in brackets, the special relief for lessors, in respect of the leasehold improvements is 1.306503. Now, ladies and gentlemen, that is what SARS says John can claim in his 2017 year of assessment when he includes that leasehold improvements into his gross income in terms of section 11H. Now, they work this out in practice, this amount, according to a discount factor of 6%. And what the effect of this allowance is, if you take the 192,000 and you deduct from it the 1306503, the net effect is that John, right, our lessor, will only be taxed effectively on the present value of that building in the current year of assessment. Okay, so you need to understand that. This allowance means that our lessor gets relief, and instead of being taxed on the full market value at that point, it's the market value or the present value of the building calculated over 20 years. using a discount rate of 6%. The good news, ladies and gentlemen, is that this amount, that 1306503 or whatever the amount may be in future questions, I need to give you. Okay, so you don't need to be able to do the calculation thereof. I will give the amount to you. You need to go and work out, or just make sure that you know how to use it within the calculation of your taxable income. Right. Let's move on to Kaya. So Kaya, our lessee, incurred leasehold improvements. He paid to put up a building of 1.92 million rand according to the lease agreement, but he spent a bit more. He spent 2.4 million out of his own accord. So we need to figure out that 2.4 million rand, how much of it is he allowed to deduct in the calculation of his taxable income. Now, the first section we need to consider, because this is leasehold improvements, is section 11G. Let me just make sure that I've got my section numbers right. Yes, but you don't have to know the section number for this, please remember. So, leasehold improvements. Now, this also works according to a formula. So, it states, what do we take? We take the amount of the leasehold agreements, or the leasehold improvements in the agreement, which is the 1.92. Now, remember, even though Kaya spent more than this, he wasn't obliged by the contract to do so. So Section 11G won't give him an allowance for the additional amount that he spent. So if you spend more than the contract as the lessee, you are limited to the contract amount when you want to calculate this deduction. Right. So that's our first element. Next up, we need to look at the remainder of the lease term or the lease agreement from the date that the improvements are completed. Now, let's just quickly have a look at this. The lease agreements, or the lease improvements, are completed on the 31st of August, 2016, right? Now, I need to work out on that date how many years of the 20-year lease agreement is still over. Right? Now, like I said in class, I prefer to use months. So I'll go, right, let's take 20 multiplied by 12, which is going to give me 240 months. Now, that is when the contract runs from the 1st of April 2016 until the 31st of March 2036, right? How many months have lapsed from the 1st of April until the 31st of August? Now, if you count April, May, June, July, August, I know that from the 1st of April until the 31st of August, I've already had 5 months of this contract lapse. So on the 31st of August, how many months are remaining within this lease agreement? And that's a very simple calculation, the 240 months minus 5. So that's going to give us our divider of 235 months. Right. So that's the remaining period of this lease agreement. So when I do this calculation, 1920000 divided by 235 months, what I get is the amount of the leasehold improvements that I can deduct per month. The problem is, in our 2017 year of assessment, this building was only brought into use on the 31st of August. So for how many months did I use it in 2017? I used it September, October, November, December, January, February. 6 months. And that's going to give me then the deduction of 49,021. Now again, I want you to have a look at what happens here. John, in terms of leasehold improvements, is taxed gross income on the 1.92 million, but he gets the relief in terms of our special lessor allowance. This is only going to happen, this part is only going to happen in 2017. In 2018, John will have no further implications. Kaya, on the other hand, is not allowed to deduct this 1.92 million in full immediately. Kaya will only be able to deduct it over the remaining period of the lease agreement, which means over 235 months. I'll have a look at the alternative calculation in a few minutes. What's going to happen in the 2018 year of assessment for Kaya is that we're going to do exactly the same thing. We're going to say what is the amount according to the lease agreement, 1.92, divided by 235, because when this leasehold improvements were completed, there was 235 months remaining on this lease agreement. But for 2018, instead of multiplying by 6 months, we are going to multiply by 12 months. And that's going to give us round about 90, nearly 100,000 deduction for Kaya in 2018. Now, ladies and gentlemen, like I indicated, if I calculate the remaining period of the lease agreement, I prefer to use months because I just find it easier to do, but you are more than welcome to use years. So if you use years for calculating your remaining period of the lease agreement, now remember, for my calculation, I got to 235 months that's left over. But if we do it in terms of years, your total lease agreement is 20 years. From the 1st of April until the 31st of August, 5 months have lapsed. So how many years of the lease agreement, be very careful here, not how many months in the year of assessment, how many months of the lease agreement is remaining? It's my 20 years minus 5 months, and that is going to give me 19 years and 7 months. Because remember, for the lease agreement, I'm not looking at the year of assessment here yet, right? So you are either going to use 19 years and 7 months, or 7 over 12, as your divider, or alternatively, you're going to use 19.58. These two are exactly the same. Just keep in mind that if you do decide to use years as your divider, that when you look at the effect on your year of assessment, you are not going to, like I did when I used months, simply multiply by 6, because remember this is the monthly amount, so I multiply by the 6 months in the year of assessment. If you use the years as your divider, you will use 6 over 12, because if you divide by years, you're going to get the amount per year. So to get the amount for 6 months, you'll need to multiply by 6 over 12. We're nearly done with this video. I know there's a lot of information. The last page, I'm just quickly going to have a look at that excess amount that is spent by Kaya. Right, so the last bit. Now, ladies and gentlemen, if we look at John is finished. We don't have to worry about him anymore. Kaya, we've sorted out what the leasehold improvement deduction is in terms of Section 11G, but that only accounted for the 1.92 million. Now, Kaya spent 2.4 million, right? Now, the difference between 2.4 million and the 1.92 is 480,000 Rand, right? So what do I do with that excess? Now, that excess in terms of leasehold improvements, if you've erected a building or any other type of asset, is you need to determine what the nature of the asset is. Now, in our class example, this asset is a factory building, and factory buildings qualify for capital allowances in terms of Section 13.1. Now, this is a section number you have to know. Section 31 is funny or different than our other capital allowances because it's the only one that says you don't have to be the owner of the asset to claim an allowance. Now remember, Kaya is not the owner of that factory building. Who's the owner? John. But 13.1 doesn't care that John is the owner. Kaya or 13.1 wants to know who incurred the expenditure. So who paid the cost for this building? Kaya did. So Kaya will qualify for Section 13.1. Now 13.1 is calculated as the 480,000 Rand because remember we've already accounted for the 1920 in terms of Section 11G, and we will multiply that by the amount of the Section 13.1 allowance, which is 5%. And remember, we never apportion our Section 13.1 allowance, so that's going to give me 24,000 Rand. Now, of course, in 2018, Kaya will also get that because this 5% tells me that this building, in terms of Kaya, that additional cost that he incurred will be written off over 20 years. So in 2018, Kaya will not only have nearly 100,000 Rand that he deducts in terms of our leasehold improvement deduction, but he will also claim a deduction of 24,000 Rand in terms of Section 13.1. Be very careful though. 13.1 is the only one that says you don't have to be the owner. In all other instances, so if it's commercial property in terms of Section 13 Quin or residential property in terms of 13.6, the lessee will not get this additional allowance because they are not the owner. Then the owner might get it. Right. So ladies and gentlemen, that concludes the muddiest points for leases. I hope this helps. If you have any more questions after this, please feel free to come and see me during consultation hours or to make an appointment. Thanks.